according to a regulatory document that was just made public. House Speaker Nancy Pelosi's financier husband bought more than $2 million worth of Tesla shares last week, making it one of the legislator's biggest equity transactions of the year. Venture capitalist Pelosi recently bought 2,500 shares of Tesla stock by exercising 25 call options with a $500 strike price, according to a congressional disclosure paperwork. The next day was the call options expiration date. The purchase coincides with a legislative debate over whether or not congressmen should be able to trade stocks. Pelosi has been in the center of the discussion because she is the House Speaker and because of her husband's substantial trading. Why then is this a problem? How has the price of Tesla stock been doing? To find out, keep watching. Paul Pelosi invested $2.09 million in stocks of PayPal, American Express, Disney, and Apple in January, among other companies. The Stop Trading on Congressional Knowledge Act of 2012, which requires lawmakers to disclose specific trades made by themselves, their wives, or their children within 45 days of the transaction, is what prompted the most recent disclosures. The Washington Post said that Pelosi's husband, who had previously bought call options in tech stocks like Google, Salesforce, Roblox, and Disney, recently made a sizable investment in Tesla. Since Pelosi's purchase, Tesla's shares have increased by roughly 10. On Tuesday alone, the market recovered more than 10. However, the business has still dropped by about 19 from its peak in November. Pelosi has a history of taking large risks with large tech stocks. According to the Post, she allegedly profited $5 million on options contracts related to Alphabet shares last year. Throughout January, the Pelosi's earned up to $30 million via bets on large internet companies. The speaker is allegedly holding her feet on proposals to add more regulations to the tech sector, according to insiders. When the Washington Post asked Pelosi if her husband's financial trades presented a conflict of interest, her staff did not promptly respond. Drew Hamel, a spokesman for Pelosi, waved away the query. Hamel claims that the speaker has no stock holdings, he clarified, stating these transactions are tag spee for spouse, with which the speaker fully cooperates. As you can see from the required disclosures, the speaker was not involved in any such dealings in the past or today. Legislators should be allowed to participate in a free market economy, according to Pelosi, who first rejected a ban on congressional stock trades in December. Pelosi changed her stance in response to a storm of criticism, saying she would be amenable to stricter stock trading laws, possibly even a ban. Legislation to limit congressional stock trading has been proposed by a number of legislators, led by fellow Democrat Senator Jon Ossoff of Georgia. Stock trading by members of Congress should be banned, say critics, if they get secret information and create policies that directly impact huge publicly traded companies. Pelosi originally opposed such a prohibition, but she has now changed her mind and shown interest in the proposed idea. Ethics experts argue that members of Parliament should not be allowed to trade individual stocks for a number of reasons. However, the COVID-19 epidemic has focused attention on the issue. Measures that would have prohibited members of Congress from trading stocks ultimately garnered bipartisan support, including that of House Speaker Nancy Pelosi, following a series of investigations into alleged insider trading by politicians, particularly in the early stages of the COVID-19 outbreak. The electorate believes that lawmakers should not be allowed to trade stocks while they are in office, since their position gives them access to information about businesses and sectors that the general public does not. We have an unfair advantage over typical investors because of this. According to Dave Leventhal of Business Insider, there are rules in place to at least clarify how lawmakers make money from the stock market, but there are no severe consequences for violating them. He revealed that in 2021 alone, at least 55 members of Congress violated the Stop Trading on Congressional Knowledge Act. In order to outlaw the use of insider information in stock trading, the Stock Act was passed in 2012. However, several legislators now claim that it falls short of adequately preventing abuse. Early in 2020, while the pandemic caused many Americans to lose their employment, U.S. House, senators made millions from fortune stock market trades. As it should, this irritated a lot of. The nonpartisan research group Open Secrets maintains lobby reports that show Tesla, manufacturer of solar panels and electric cars, spends hundreds of thousands of dollars annually on federal lobbying. Some people think Elon should be thrilled by this debate, since it indicates that people think Tesla is a premium stock that is worth breaking the law to obtain. How is the price of Tesla shares doing right now? It's unjust that Pelosi has this edge, but it makes sense because Tesla is one of the most purchased companies. With the opening of 2 facilities and an excellent results call, Tesla has had an incredible year thus far. But since Pelosi's acquisition, the stock has struggled. Once again, the stock has plummeted to $800, where it was earlier in the year. Tesla stock was not spared from the selling as the NASDAQ lost 2 and the C500 index fell 1.9. Indeed, it has now declined for 3 straight days, falling a further 3.8 as Wall Street's general sense of dread has gripped it. Why are investors feeling this way? One cause is worries about interest rates going up. The yield on 10-year Treasury notes recently dropped to 3.185, the lowest since 2018. Actually, in an effort to combat inflation, the Federal Reserve is hiking rates. However, from one point of view, higher interest rates are inflationary since they increase the cost of purchasing a home or a car. Additionally, they lessen the incentive for consumers to spend, which could hurt the economy and possibly cause a recession. When inflation and a stalling economy come together, investors fear stagflation, which is a highly fictitious scenario. Apart from this widespread fear, the Wall Street media gave Tesla investors new worries during the weekend. First, Barron's claims that GM is getting ready to introduce the Cadillac Lyriq electric SUV and is releasing the GMC Hummer electric truck to increase competition in the electric car market. WCEU Herbert Diess reportedly promised that his company would surpass Tesla as the global leader in electric vehicle sales by 2025, according to Reuters. IP Global Market Intelligence's historical data indicates that Tesla has demonstrated its capacity to generate a profit in 2013 and maintain profitability during a run of 11 consecutive profitable quarters from 2019 to 2022. With its current operating profit margin of 15.5, WC's outperforms both GM and Ford by almost twice as much. All signs point to Tesla performing quite well in spite of the competition. Tesla's success has been predicated on the idea that self-driving cars will revolutionize transportation. Despite the recent relative success of Tesla's autopilot and full self-driving suites, Morgan Stanley analysts doubt that the automaker's growth and development will be fueled by autonomous driving initiatives. The financial institution is placing its bets instead on Tesla's core business, which is the production of cars, as well as other strengths like supply chain management, material sourcing, and infrastructure development. It's no secret that robotaxi and FSD from Tesla aspirations have fallen short. Elon Musk had promised that the company would finish its journey into fully autonomous vehicles by 2018, but every year since then has brought with it a fresh set of challenges, be it related to production or the availability of necessary parts, which has delayed the release of a fully functional FSD suite or the planned robotaxi fleet. This has raised some concerns about whether Tesla, which has previously shown that it can manufacture products well, would be able to sustain its remarkable growth rate through one route over another. Focusing on what Tesla does best is the real route to growth and higher valuations, according to a recent note to investors from analysts, including Adam Jonas of Morgan Stanley. Tesla has increased car deliveries for 9 consecutive quarters by concentrating on increasing manufacturing accuracy and efficiency over the past few years. Even while the closure of Tesla's most productive plant in Shanghai may put that streak in jeopardy, there's still evidence to suggest that the company's manufacturing capabilities represent the best path for future growth. Tesla has made great strides in its FS program through the beta fleet, and Autopilot is coming off one of its safest years ever when compared to national accident data from the NHTSA. However, it's unclear if Tesla will reach complete autonomy by year's end as Musk has predicted. Musk expressed optimism earlier this year that he would be surprised if the company did not make major progress and complete the suite by the end of 2022. Musk is still bullish about Tesla's FS development. What's your prediction for Tesla's performance in the second quarter? Will they succeed in achieving FSD? Please leave a comment below.